Hello, everybody. My name is Andrew Yates. I am the CEO and co-founder here at Artesian Due Dil. And today I'm absolutely delighted to welcome you here. We've had over 200 registrations for this session. We're going to take 45 minutes of your valuable time, and hopefully we're going to talk about some extremely interesting things. Joining me today, I've got a panel. I've got Richard Blackburn, who's the Managing Director of the North East region at PIB. He's actually a late entrant, stepping in for one of his colleagues who unfortunately wasn't able to join, but Richard's going to do a great job for us today. Also joining Richard, we've got Martin Camp, who is Divisional Director and Head of New Business at Aston Lark. You might have read a little bit about Aston Lark in the news this week. Not a topic for discussion today, but nonetheless newsworthy. And also Fayes Reynolds-Shaw, who is UK Regional Director at Zywave. I know Fayes got some really interesting insights to share with us. The theme of the panel discussion today is to maintain a competitive advantage during these really challenging times. Insurance brokers really need to harness both data and insight and customer-facing content more than ever. And so the main themes today are going to center around the commercial opportunities and challenges of the hardening market, this concept of being in a hard market. We're going to talk about that in a moment. The impact of the hardening insurance market on broker underwriter relationships, and how data and customer content can help insurers win in a hard market. So I'm going to start by asking our panel to introduce themselves one by one. If I could start with Richard.
Hello, good afternoon, everyone. Richard Blackburn. I'm Managing Director of PIB Insurance Brokers business in the North East region. I joined PIB in March 2018. Prior to that, 16 years as Managing Director of Wilby Insurance Brokers, which at March 18 was acquired by PIB. And having spent 35 years in the insurance broking sector, I can not only recall the last hard market, but equally when we used to go from hard to soft market cycles over a 3 to 5 year period.
Thank you. How about you, Martin?
Good afternoon, everyone. I'm Martin Camp, Divisional Director at Aston Lark. I've also been in insurance for 30 plus years. I think my mum wasn't convinced I was committed to being a forensic scientist, so she made me go.
We can't hear you, Martin. You've just suddenly gone.
Oh, sorry. Is that better?
You've just suddenly gone on mute. Let's move to Faye, and we'll go back to Martin. Could you introduce yourself, Faye?
Yeah, sure. So I'm Fayes Reynolds-Shaw. I'm UK Country Manager for Zywave. I've been with the business for 8 of the 9 years that we've been operating in the UK market. And I'm certainly excited to connect with you all today. My background is not insurance. I actually come from a sales, marketing and SaaS background. And a little bit on Zywave for those who don't know us. So we're an international insurtech company. We focus on supporting insurance businesses in automating their growth. Globally, we are just over 1,000 employees working in the UK, Canada, the USA and the Philippines. And in the UK, our focus is all about the front office aspect of the brokerage. So all of that which touches and drives engagement with the customer. And we lead the sector with a portfolio of sales, marketing, content management and client portal solutions. So yeah, hoping today I can share some insights on what our customers are doing during these times.
Apparently everybody could hear Martin. Martin, I heard the point at which you said 30 years. If you just want to finish off your introduction, that'd be great. Apologies for interrupting you.
I thought it was my lack of technology skills, Andy, not being able to use headphones. So so I've been in insurance 30 years. I joined when I left school, ended up sort of like leaning towards the sales side of insurance. I've done roles such as sales handler, sales exec, sales leader, and now I'm the head of commercial new business for Aston Lark, which means I support over about 20 offices now with their new business activity.
Okay, well, listen, let's get straight into it. Is this the most challenging market you have experienced? Let's start with Richard.
I think it's definitely the most challenging market in the last 20 years that we've experienced. And I think it probably tends to be focused around specific classes where the real challenges exist, certainly around property classes, financial lines and professional risk exposures. I think if we go back to the last hard market back in 2001, that seemed to affect all classes of business, and the market was sort of driving up rates across every sector. So yeah, absolutely the most difficult and challenging market we've experienced in the last 20 years, and some real challenging risks to get home over these last 18 months, 2 years.
And Martin, what about you?
Yeah, I'd agree with Richard, and I think what just to add to that, what makes it even more challenging is that the timing of the hard market coming with COVID, because the accessibility to insurers and underwriters has been very difficult over the last 18 months, and I think that's made it even more challenging than it would have been if we had access to insurers.
So I'm going to. I should have said at the beginning. Every now and again, we're going to ask. There's approximately 150 people online right now. We're going to ask you to participate in an interactive poll. I'm going to put one of the first questions up in just a moment. Oh no, here it goes. Up it goes. If you could just answer this question: when do you expect to see the hard market start to soften in terms of timeline? If you could just answer that question now. It's a live interactive poll, so we should see the answer come up any second. Okay, so just waiting for the answer to come up. Okay, I'm gonna close that down. The answer will be presented to us in a second. But from the panelist perspective, I think there's the answer right there. So we're looking at somewhere between 1 and 3 years. That's where about 76% of you are landing on that particular question. So just rolling on from that. There's a fairly obvious catalyst in relation to the hard market, but I need to ask the question, what do you feel has been the major contributor to the current state of the market? Let's start with you this time, Martin.
It's been a bit of a perfect storm, I think, Andy. I mean, there were signs of a hardening market pre-COVID. So I think we were seeing some big claims coming out of the US, general increased claims costs, more claims. We had a spate of flooding, didn't we, before COVID, and then COVID hit. So all of these things I think have combined to sort of give us that perfect storm, reduced capacity in the market, which has led to insurers having to do what they've needed to do. And of course, the timing has worked quite well in the favour of insurers. Businesses are having to go through a lot of change, and therefore it's quite a timely time to have a sort of a change in the market conditions.
Anything to add to that, Richard?
I think I'd agree with everything that Martin's sort of said there, really. And I think the sort of major factors have been the sort of reduction in capacity that insurers have to write business, and that's probably been led by the reinsurers terms that have been imposed on them, and sort of that, and due to sort of number of losses that were encountered, there are a number of insurers that exited entirely certain lines of business or withdrew partially from certain lines of business. So that's certainly major contributors to the factors around the hard market. And then as we sort of look at financial lines business, management liability, directors and officers. We've certainly seen insurers picking up losses that they probably weren't even thinking they were exposed to when policies were first written. And again, on sort of professional indemnity risks on the back of changes in building regulations, again, and insurers pulling out of the market and reducing capacity. Has driven that as Martin says, that the perfect storm for insurers to drive up rates.
I know, talking to one of our customers that use the business automation capabilities of Artesian to speed up the underwriting process, the rapidly changing circumstances of customers has also represented a challenge, because the regular sources of data that you might go to kind of validate and verify are changing so quickly. There's a need to kind of do things in a little bit of a smarter way. And on that subject, it's been kind of widely reported that the hard market's putting even more strain on the kind of underwriter-broker relationship. So be as controversial as you like. What are your thoughts on how well, first of all, on that statement, but also how we might be able to work in a more integrated way? Start with Richard, please.
I think those strains certainly do exist, probably when rates have been driven up, and probably frustrations exist where people haven't operated in a hard market conditions before. But I think certainly at PIB we place great store by the strength of the relationships we have with our insurer partners, and in the hard market we're working harder than ever to maintain those relationships. And working further and further out from renewal to enhance those relationships and create that dialogue. And I think probably a key factor of that is dialogue and verbal interaction, communication with those insurer partners, because it's very much still a relationship business. And we're having to call upon those relationships and partners to get some challenging risks over the line, and it comes back to the strength of those relationships with our partners.
We had David Jones, who is one of the senior directors of underwriting at QBE, speak at one of our lunches a couple of weeks ago. Faye, you were there. I think Martin, you might have actually been there as well.
Yeah,
that might have been where I was able to conscript you into today. And he was saying that what would be great is if the kind of as much of that due diligence that goes on at the point where the opportunity is created can be passed through the line when there's a need for underwriter involvement. That can certainly help both build the trust and speed of execution. But what would you add to that, Martin? What would you add to Richard's thoughts?
Yeah, it's I mean, Richard's spot on with that, and I think we have to remember that we need insurers as much as we need clients, because without them, we haven't got anything to sort of like to look after our clients with. So an element of empathy, because the people that we've dealt with for years and years also don't want to give us that news that we're having to give our clients, and the best way to help them through that is by getting in touch with them early, understanding what their pressures are, giving them the information that they can then make better informed decisions, rather than maybe, because a lot of the time they don't really understand the clients that we're looking after, because the clients have changed quickly. That's one area. And the soft market was in such a way that you probably didn't have to go into as much detail about your clients as you do now. So so I think for me, there is a strain on the broker underwriter relationship, but we've got to work on that, because we need insurers so that we can insure our clients. And
well, let's ask 152 people that very question. Do you feel, if we could pop the next poll question up, do you feel underwriter broker relationships are the most strained they've ever been? Yes, no, or unsure? Please vote now. Hosts and panelists cannot vote, I have been asked to remind our hosts and panelists. Just give that a couple more seconds. And 70% of us believe that to be true. I think Faye and I have got this kind of vision that one day everything will be so joined up that that technology is going to be able to help. So this is a question for all three of you. This is where I bring Faye in from the panel. And I'll start with you, Faye. What do you view as the main opportunities for broker success in what is clearly, we all agree, a hard market where broker and underwriter relationships are under strain? What's the main opportunity that you see, Faye?
Yeah, well, I think based on our conversations with brokers that we work with and that we're kind of talking to regularly, one of the greatest opportunities right now is new business acquisition. There is disruption happening in the market, and certainly from that challenge, opportunities can come. But I think the approach that brokers need to take at this time is definitely a more value-based sales approach to compared with what they were previously operating with in the soft market. And I think some of the trends that we've seen really effectively driving new business opportunity at this time are ideas such as, for Xywave, obviously we provide content that brokers can use. So really cleverly using Xywave's business resources and risk management resources that are branded back to the brokerage to prospect during this time. So that the broker is able to really educate those potential customers on the hard market itself, what to expect when it comes to the premium. And actually, we see time and time again, that kind of approach is helping brokers to win new customers from incumbents who may have actually been burying their head in the sand a little bit at this time. And brokers can use content in that way to really shine a spotlight on what the prospect may not be getting from the incumbent. And that incumbent could be a broker out there right now who isn't in regular contact with their clients, let alone is even educating them on the hard market. So I think up the game a little bit from a sales perspective, and there's a lot of opportunity out there to win.
Okay, and what would you add to that, Martin?
I mean, Faye's probably got most of my list on there actually, but I think every business in the UK has had to adapt to either survive or grow. And if you can really understand, if you can really get under the skin of what that means for that particular business, that creates your opportunity. So it creates your opportunity to create different propositions, and that automatically gives you more opportunity, and at the very least it enables you to get to know your client better, which is also a really, really good opportunity in this time. I mean, the thing about burying the head in the sand, I think you're right, Faye, and I think we're seeing some brokers that have adapted to a new form of communication of not going to see clients because they haven't been able to, and think that that's okay for this year and for next year. And if you can get yourself in front of clients or get yourself communicating with prospects and clients more, that's a really, really good opportunity, because those businesses have changed since the last time an insurance broker went and see them.
Absolutely. So Martin's advice, everybody, is get back out there. Richard, if you could pick up there, and also, perhaps in contrast, because I'm sure you've got a lot of the same advice. What do you feel is the biggest challenge to brokers succeeding? So if you could try and kind of talk about the main opportunity to be successful, but also couple that with what you think is the greatest challenge or challenges.
Yeah, I think as everyone said, I think the greatest opportunity is in brokers being able to demonstrate the value that they can add to clients in these difficult times, not only in how they access the market, but in being a trusted advisor to clients through very challenging and difficult times, and providing advice in the correct structure of insurance programs, and making sure that all their exposures are correctly protected. And so this is the real opportunity for brokers to shine in how they provide that advice to clients. And I think there's a real opportunity for for brokers to demonstrate that value through additional services that they can provide from a risk management perspective. And also within brokers, there's a huge amount of specialist and expertise, knowledge that can be deployed to help clients through sometimes some difficult conversations in getting results. I suppose in contrast to that, the challenges are very much we're not only probably in difficult insurance market conditions, but for a lot of clients, they're in difficult economic times as well, as we sort of go through the COVID situation. And the biggest challenges, as Martin highlighted, is not engaging with clients and not engaging and keeping in regular contact with those clients, because you're missing that massive opportunity not to be that trusted advisor to clients. So I think there is some very difficult messages to deliver through a hard market, but the more you're in contact, the strength of that relationship, the easier it is to manage that process.
I mean, I would supplement that, certainly based on the feedback I hear. I know that Zywave has a role to play in terms of ensuring that conversation is current and relevant. I'm hearing it from kind of three angles. I think the brokers have always understood the market and the market opportunity, and have always been able to convey that. But the ability or the opportunity to be able to do that relies upon knowledge of the customer, getting to know the customer. So that at the point where you are sharing the knowledge and the insight, that's both relevant but also timely. And I think there are two angles to that. There's the angle that Faye talks about in terms of make the conversation interesting and relevant by using content that is going to really drive that. I think at Artesian we supplement that with the kind of information about the company, which is always useful. But increasingly there's an opportunity to look at that forensically. What do the changes in the circumstance of the customer mean in relation to this insurance proposition that I'm gonna make to my client? So what would you add, Martin, in terms of specific challenges that you see the team at Aston Lark, for example, facing?
I think it's the potential trap of just focusing on it being a hard insurance market, because everyone's day job is harder. With a hard market, it is harder. It's harder to retain clients. It's harder to win clients because it's generally trickier. No clients are welcoming you with open arms with the news that you're giving them. So, and a trap of just focusing on the fact that it's a hard market. You've got to be much more aware of your clients' challenges and other challenges. So we're only one of many providers to businesses. So you've got to be aware of that, and using systems such as Zywaves and Artesian does help you have that that understanding a bit more.
I promise everybody I didn't ask for that pun, but there is no such thing as a free lunch. So again, this is where I bring Faye in, maybe with some examples you've seen, but we've got a lot of experience on the panel today in Martin and Richard. That's not me telling you that you're old or anything like that, just that you've got a lot of experience. Give us a couple of things each, if you would, in terms of things that you're doing differently in your, this is without giving away any of your trade secrets. What are you doing differently in the sales and renewal process compared to when it was a softer market? Just a couple of kind of maybe takeaway ideas, and then Faye, I'll come to you at the end in terms of what you might have seen working with the Zywave customers. So let me start with Richard on that question.
I think the key thing which we've done on the sales and renewal process is starting it much earlier, and even in some cases as much as 6 months out from renewals, and engaging with not only with clients but also underwriters in that process very early on, but as a sort of minimum 3 months out. And then the other aspect which we've brought in is to look at how we can make the most of the resources we have across the PIB group, and which other brokers will have access to, is bringing in your risk management colleagues in terms of how you can present the risk in the best possible light to insurers, and also with a large number of sector specialists which we can draw upon, and provide comfort to clients in terms of the solutions we're providing, but also comfort to insurers in terms of the risks that are being presented to them.
That's great. What about you, Martin?
Yeah, we've been doing much the same, Andy. I think we've got the other thing that we've sort of started to use technology better. I mean, I don't think any of us had done a WebEx call before March last year. If we had, it was few and far between. But adding that into your armour of being able to communicate with your clients more has really helped. So we're trying to sort of like embed the use of technology, not to replace face-to-face, but to give you another contact point and another contact reference with your clients, which is a lot easier than having to schedule time for meetings and everything else. So yeah, so we've done that. We've also sort of done some stuff where we tried to help clients in other ways. So we did a whole load of stuff on a road to recovery campaign, which gave our clients some access to collateral of what they should be thinking about as they get their people back to work. We've also just done a back on track competition where we're sort of funding a sort of a grant bursary to a small business that's developed the best example of recovery. So we're doing things like that as well, trying to show support to commercial businesses in the UK.
And just before I ask you to go, Faye, I did mean to say that anyone that's attending can ask any question of any of the panelists, and the medium to do that is through chat. So if you'd like to fire those questions in, I've got somebody that's feeding them into me. Please feel free to do so. Faye, what would you add to that in terms of some of the amazing, dynamic, really cool, super smart things that people are doing differently than they were maybe 12, 18 months ago?
Yeah, I think, really just to reiterate Richard and Martin's point, to be honest, it's from the risk management side of things. So we've seen a huge increase, a huge spike in brokers downloading and emailing out loss control content, risk management content over this last year or so, and also their clients clicking on it, engaging with it. And I think really kind of making sure that becomes part of the renewal discussion is really important. Positioning around the concept that, rates are going up, but the investment that we're making as a broker in your business is that we are going to support you in implementing steps to make you a more attractive risk to the underwriter. And if the next broker isn't sharing this kind of quality of risk management resource with you, then I would question if they can get you the best deal. So I definitely think that, making sure risk management isn't just part of the customer experience, but is also part of the sales process is key. And then reiterating Martin's point actually about technology. So we've seen a huge increase in brokers investing in improving their digital customer experience. And again, to Martin's point, it's the perfect storm. It's the fact that this has come along at the same time as COVID. So people can't meet in person. So it is critical that the broker ups their game when it comes to sharing value digitally. With Zywave, that's been through the client portal. So that's giving the customer access to thousands of resources, risk management, and so on. But also thinking about that in the midterm meeting or the renewal meeting or even the sales meeting, as a broker, opening up your laptop into that portal, searching for something like construction and showing that construction client a whole host of resources that are there to save them money and time and take jobs off their to-do list. So I think a lot of it comes down to making sure that this value is shown all the way throughout the interactions that you're having with clients and prospects.
Okay, well, let's move to another question. This time we're going to ask again, it's a very simple yes/no question. Have you, as attendees, had to adapt your sales and renewal processes since the hardening market? I'm expecting to know what the answer is, but if you could answer that, yes, no, or unsure. Not a great surprise there. 96% of us have had to adapt. Okay, so as we're moving into the end of the session, I've just got a couple more questions, and there will be time at the end just to take any questions from the audience. But Richard, I understand you've developed a program at PIB called Achieving Client Excellence, very nicely named acronym ACE. Which is a kind of best practice client service platform. Can you tell us more about that platform?
Very much so, yes. I think back in October 2020, PIB unified its brand of its retail broking businesses from the acquired businesses to one unified brand of PIB Insurance Brokers. And so the concept of achieving client excellence was developed from that to provide best practice across the entire business in terms of how we access the whole of the resources of PIB Group, and in terms of a range of resources to support account executives, account handlers, broking colleagues in how we present ourselves to clients and the processes we go through, and how we present ourselves to insurers as well. And that involved a development of an intranet site for colleagues, best practice tools being available to colleagues through that intranet site, and reference materials being available to assist clients through the sort of challenges of the hard market. And we also developed a number of learning and development programs which have been online. So very much bringing together best practice across the PIB Insurance Broker platform following our change of brand, and something which will continue to develop as we go forward.
That sounds pretty cool. Now I'm going to go slightly off-piste, my panelist colleagues. We have got a little bit of a script, because I've got a question here from Ed Fensom. He asks. He said the hard market doesn't seem to be uniform, as there's plenty of capacity and appetite in the market to grow commercial combined at the SME mid-market level. What other variations around the hard market mix are brokers seeing? And I'm gonna make that question specific to PIB and Aston Lark. So let's start with Martin on that one.
I think yeah, there is appetite in the market for certain types of risks still. And there is appetite in the market for risks where insurers can get the right price for that particular risk. So that's but that's where the challenge comes, because we've had clients for the last 20 plus years see their insurance costs ultimately reduce year on year, and we've therefore got maybe a couple of generations of insurance professionals that have never had to ask a client for an increase in their premium or terms. And that's what I think is creating ultimately the challenges that we face. Commercial combined for SMEs, I think that's right. That's quite a buoyant area. Technology is quite a buoyant area.
Cyber,
property, cyber, yeah. So I mean, there's lots of opportunity out there, and appetite. And you do know about it pretty quickly when it's not in appetite, and that's when you're scrabbling around trying to find capacity. That it gets very tricky, and there's some property risks out there that insurers don't want. You could have a risk with an insurer where there was 100 million sum insured a couple of years ago, and one insurer would take all of it. Now if it's over sort of like 30-40 million, you're having to look to get other insurers to participate in those programs, and that's when it gets a bit tricky.
I'm guessing, Faye, when we're getting more diverse and we're trying to kind of pick out these various segments, content is king. In that perspective, so in the hard market, how are you guys at Zywave supporting the sector to leverage those strong client relationships through that content?
Yeah, well, I mean, I think that, the importance that content can act as a bridge between the broker and the clients and prospects has never been more apparent. It really is there to make you visible. And, certainly if a broker's looking to focus on a certain sector or a certain type of product, being able to share content that aligns with that helps them to position themselves as a specialist in that area is going to be key for them generating the results that they need to generate. I think that, the trusted advisor concept, it is key during these times, and that does pull through to content as well, because, quality trusted content equals more trust equals more value. It's that simple. And what I'd say to brokers as well at this time is never assume just because your clients aren't coming to you for content that they don't need it. If they're not asking you for it, where are they getting it from? Is it other brokers? Is it a competitor? Are they paying for it from someone else, or are they just not being educated at all? Which means that are they the greatest customer for you anyway? So I think it's critical at this time, and there's lots of opportunity.
Richard, Alison Walters, who is one of our guests today, she's asked the question, and I kind of, you made the comment at the beginning. You said it's been 20 years since I last saw a market like this. Now I'm 53 years old. I remember what it was like 20 years ago, but some of the folks on the call might not remember that. Two questions. What advice would you give to anyone who's maybe not experienced this hard market? And what Alison's asking is, what do you see as being the one thing that might eventually trigger the shift back to softer market conditions?
I think one piece of advice is probably identify those risks where you're going to have challenges with. We probably all know those challenging property risks, as Martin identified, where it's going to be difficult to get over the line, or difficult financial lines, professional risks, where it's going to be difficult to get the capacity you need. So identify those early, start early with the process with the clients, start early with underwriters, and then you've got time to manage that process and manage expectations of the client and work with insurers to get the results. In terms of where the market is probably going to start to turn, I think that ultimately there will come a point where as rates go up, capacity will look and say there is opportunity to come into those market sectors and write business again at a profitable level. And the question was asked earlier as to when we think it might turn, and it's probably within the next sort of 12 to 18 months, if not before.
Maybe sooner.
Yes.
If the Bank of England's protestations are to be are not to be ignored. So you think a rate rise that will signify or deliver a shift towards more margin, more profitability? What about you? Martin? What do you think is going to be a key trigger event to move us back towards softer market conditions?
I think the general cleansing of insurers' books over the last few months is they're going to see a change in their results, and ultimately that'll bring their appetite back to writing business again. We've started to see it. I think from the class of directors and officers, it went absolutely nuts in the 18 months ago. And you're starting to see it sort of like taper off a little bit now. So, and will there be that one event where we start to see the market crash? I don't believe so. I think it'll be over a period of time. And then, as Richard said, you'll get more people coming back in. looking to sort of like do more new business and win more new clients in an area that they feel comfortable with, that they would have learned the type of business that they want to go back after and how they want to write it.
Okay, so before I summarise, because we're coming to the end of the session, and thank you to everybody that registered at the beginning for holding firm. We've still got all the same people on the line. One piece of advice for folks to take away. 30 seconds. Start with you, Faye. I think I know what your advice might be.
I would say my one piece of advice is just up your game when it comes to content that you're sharing, whether it's sales materials, whether it's education with clients and prospects. What would have been acceptable 2 years ago is probably not the case now. Okay,
Martin?
Don't hide. Talk to your clients, communicate with your clients, and do it with plenty of time. Don't be afraid. It's a market, and it's the same as every other market. It fluctuates, and business owners accept that markets fluctuate. It happens in their own businesses. So don't hide and talk to your customers.
Get out there, as you said. And what about you, Richard?
Again, probably similar vein, but work on relationships with your clients and with insurers. And that comes back as to wrapped up by Faye and Martin, to communicate with them. Yeah.
So in summary, I'm going to just wrap up here. I've got a whole raft of really insightful advice that our panelists have shared. I want to say thank you to our panelists for what's been a fabulous and interactive conversation. But what did we learn? We learned that we need to get back out there. We learned that we need to engage earlier in the process. We need to lean into our colleagues in terms of the multiplicity of experience and knowledge, bringing in different specialists to make the conversation more interesting. We learned that content is really key to the conversation, and I would echo that. Getting to know your customer, making your engagement relevant and timely is a must. Knowing the market and knowing the products and services is something that I would argue everybody has. It's all about that advantage, and we learned that the key in the hard market is to identify the risks that you can secure the capacity in. Identify them early, engage early, bring your partners and your underwriters in early. And then finally, we got some great advice around when we think collectively we're going to see the market begin to soften again. We think interest rate rises are key to that, and also the recent kind of cleansing exercise that it's gone on that started to change the results to deliver better results, that's going to broaden people's appetite to take risks. So I think we're just about out of time. Once again, like to thank our panelists, Faye Reynolds-Shaw from Zywave, Martin Camp from Aston Lark. I didn't ask you the question about Howdens, Martin, but I'm sure everybody's wondering what that's going to mean. And also Richard Blackburn, who was drafted in just a few days ago. Thank you especially, Richard, for your fabulous contribution today. And thank you to the 150 people that joined us today. I'm Andrew Yates, CEO from Artesian, and we're signing out. Thank you.